Germanos from Alliance Accounting here. Thank you for joining us. Hope you enjoy our video. Today what we're going to be talking about is about property, pros and cons of investing in property and things to look out for. So this will be great if you're a first-time investor or someone who's looking to buy another property. So what are some pros and cons of properties? The benefits can be that property is actually bricks and mortar. They're not as volatile as certain other investments such as shares. So for those people who would like to take a more safer approach, property might be a good one, where it provides greater returns than cash, but not as low returns as cash, for example. Another benefit is that you can earn rental income while you pay off the mortgage. So that rental income will help you pay off that mortgage a bit quicker. Another one is if it's an investment property that you own, if you take out a loan, the interest on the investment property will be tax deductible to you. So of course seek proper advice, but chances are that it will be tax deductible. And the final thing is, as I said, if you're investing, it's something that you can touch. So some common pitfalls of property, some things that might be something to consider over, for example, other forms of investment such as shares and what have you. A common pitfall is that property is a large-scale investment. It is a $300,000, $500,000 investment. Unfortunately, you can't just sell a portion of the property if you need some quick cash. So that's something in there that it might take some time to sell a property if you needed some quick cash. Another thing is interest rates, things to be aware of. So jumps in interest rates might affect your cash flow. Of course, with property investors, it is a very good and smart idea to have a 2% buffer of interest rates. That way, interest rates do go up, you're already prepared for that. Another thing might be that there may be periods where there aren't tenants in the property. So you'll have to cover the rental expense or the mortgage expense while it's not tenanted. So another thing that you might consider is landlord's insurance. That's quite a good thing to look at. So that would help cover you from tenant damage and malicious damage and possibly rental default. So be sure to look at that because that will help offset any rental income that you do not earn. As I mentioned, you can't sell off a bedroom, so it's not liquid. And if a property is your major form of investment and basically your only investment, there's no diversification. So when we say diversification, what we're saying is that you're putting your eggs in many baskets rather than putting them in one. So, for example, if you had a bit of investments in shares, a bit of investments in cash, a bit of investments in property, what happens there is if property goes up, shares might go down, and vice versa. So if you diversify, there's less risk of you losing more money. Whereas, for example, if you have all your investments in one property, if a suburb goes down, for example, your property is going to go down. Now, the issue there is that you might have to hold it for a longer time in order for you to recoup your money. So basically, things to look for in an investment property. Where to buy. Keep your eyes on the newspapers. Keep your eyes on the news. Do your research. See where potential growth centres might be. Be careful of problem areas. We've got a great buyer's agent who actually does research for you to help you look into what suburbs might suit your profile. So suit your cash flow, suit your growth needs, and suit your retirement needs, for example. So they can help you deciding on where to buy. What to buy is another good thing. Are you looking for great capital growth? Are you looking for rental yield? Are you looking for a house with a land? Or are you looking for just an apartment or unit, for example? Then there's, for example, additional costs that you'd have to be wary of. Of course, with property, there are some large-scale costs such as legal costs, there's stamp duty costs, and there's, of course, the ongoing mortgage costs. And if you're borrowing more than 80% of the value of the property, there's also mortgage insurance that you'll have to worry about. So there are ways around mortgage insurance, but that is a concern to look at. Now, work out your investment return. That's a key one. See what you expect to receive from your property. So, for example, there are two ways of gaining revenue from property. There's the rental income. You can gain, of course, through the rent. Then there's the capital growth. So them put together will give you the total return on the property, and hopefully the intention is that by putting those two together, the amount of return that you receive on the property is greater than the interest and the expenses of the property. So over time, you'll be making money on property. Now, borrowing to invest is a great thing, but be careful that you do not over leverage. If you borrow too much, that's a great risk because you have to put a lot out of your pocket. So by putting a lot of money out of your pocket, you're basically delaying yourself from being able to buy the next property. So borrow enough to be able to buy a property, but don't borrow too much that you actually have to suffer as a result of that property. Another benefit of a property, for example, is potentially negative gearing with tax. So what negative gearing is basically where your tax deductions exceed your taxable income from that property, and as a result, what that does is the negative amount from the tax deductions offset your other income, and that way you're able to get a greater tax refund. So a key thing when managing your property is, of course, insurances. So we've mentioned landlord's insurance. That's quite a key one. Then there's building and contents insurance. They're also quite important. And consider while managing your property renovations and repairs. So do you want to renovate before you rent out the property, or do you want to wait until after you rent it out? Say if you're going to live in it. If you renovate before you rent out, are the tenants going to damage those renovations? So they're key things to think about. How much will the renovation increase your rent by? Will it be worthwhile? So there's some quick property tips. Hope you enjoyed them. If you wanted more information, I'm happy to have a chat. Feel free to call me, Germanos, on 1300 135 918. Well, I work with a whole group of specialists and professionals, from mortgage brokers to real estate agents to property buyers agents, to solicitors, who actually get together and try to help you find the right property and make sure that you actually understand the property investing, so that way you don't jump into the deep end and not know what you're getting yourself into. So again, hope you enjoyed it. Feel free to subscribe, feel free to contact us, and my name is Germanos.